Hi friends, good evening. Welcome to this batch for CA Final FR as per the new syllabus. I hope I'm properly audible and visible. Just write down in the chat box if I'm audible, visible. Just write it down in the chat box, not on our Telegram group. This is the first day, so let me just have this check properly. Aditya says yes, Chaitanya also yes. Okay, Abhilash also yes. Chalo, thank you. Now, CA final, the last and the most important level of CA. See, final level actually requires in-depth knowledge from your side. We know there are 8 subjects in final, basically as per the old syllabus. Yeah, in our new syllabus, we're having only 6 subjects. The 2 subjects basically have gone in the self-paced learning. Yeah, self-paced learning, the 2 subjects have gone. It's not removed, they are there. Now, the subject of FR generally is the first subject which everybody takes, and this is a very vast subject. There are all IND AS which are covered, and we know IND AS are based on IFRS. So we'll be learning more related to IND AS, as well as we'll also be learning about that IFRS and what is the difference in IND AS and IFRS, everything over here. But I want to tell you a few things before I start. Number one, I want you to have a proper discipline. The final level is not difficult, but you need a disciplined approach. The problem with students is they don't take up their coaching on a timely basis. They keep everything at the end, and at the last moment, they're not able to complete the syllabus. The first and the most important thing which you need to ensure is you are able to complete all your syllabus on a timely basis. And according to me, the best time to complete your syllabus is approximately around 5 months before your examination. Last 5 months has to be only for your self-study, wherein you're studying, there's no coaching which is pending. To complete your syllabus on a timely basis, you're attending live, make sure every day 6:30 to 9:30 is our class, you are attending live, and there should not be any classes which are missed by you. This will ensure you're able to complete the things on time. Number 2, you need to have a conceptual clarity. If you're not able to understand anything, ask it. Ask it. Yes, pooch dala to life jingalala. Just ensure all your concepts are clear. That is second very important thing. And third, give equal justice to your coaching as well as your articleship. It should not be like you're giving all the time for your articleship, but you're not giving time for your coaching. I'm not telling give more time to this or more time to this. I'm just trying to say balance both of it very properly. The day when you're ready to miss your articleship should be the day you're ready to miss your class also. If I miss my classes but I go to articleship, that's not fair. The day when you're ready to miss your articleship should be the day you're ready to miss your classes also. So just ensure you're able to do it on a timely basis and you're giving justice to both the things, articleship as well as your lectures. Now, our lectures are approximately for 3 months. If I just come over here, okay, this is our CA final FR. As per the new syllabus. Okay, the batch we are starting on 16th August and estimated completion is 15th of November. It's approximately 3 months time. We have lecture every day 6:30 to 9:30 p.m. but on Sunday will not be having in evening. Sunday will be having it in morning. Yeah, I repeat, Sunday ko will not be having in evening, will be having in morning. If by chance you have some other classes on Sunday and you are not able to attend in morning, I request you to watch the recorded one later on. I repeat, I request you to watch the recorded one later on. Sunday, I'll be keeping generally morning 7 to 10 a.m. So it's a 7 days a week, but there might be few holidays coming in between. I tell you, 25th of August, I'm coming to Bangalore for some work. So 2 days at that time, probably the lectures might be off. So few offs might be coming, but we'll be finishing by 15th of November. And the material will be provided to you in a physical form. Now, sir, you've not got material as of now. What to do? If you just check out in our Telegram channel, I have sent a link for the material. I repeat, if you just check out the Telegram channel, I have sent you a link for the material. If you click on that link, you'll be coming over here. It's a Google Drive link which is given. In that, go to material. Yeah, there's this material. You just go to the material. In that, you go to CA Final Paper 1 Financial Reporting. Okay, then go to the complete course. We are doing a complete course. It's not a fast track or a crash course. It's a regular batch. In that, if you see started on 16th August, today's date. Started on 16th August, click on that. You'll find out index and there's chapter number 1 given to you, Introduction to IND AS. Full-fledged material I have not put in over here. You'll be getting a full-fledged material physical copy only. So just 1 or 2 chapters which are required, I'll just put it over here. Are you clear? Any doubts regarding this material? I want answers from you all people. It cannot be one way, it has to be two way. Are you clear about the material? Okay, thank you. Chalo, now coming to the chapters which we have, I'll just first discuss all the topics which we are going to learn, and then today we are going to start with the first topic, which is Introduction to IND AS. The target today is to finish up your chapter number 1, which is Introduction to IND AS. Okay. Now, if you just see over here, chapter number 1 which we are required to study is Introduction to IND AS. Chapter 2 is Conceptual Framework for Financial Reporting. Whenever we are having this financial reporting, the financial statements being reported, assets, liabilities, incomes, expenses, all that things, uske related, there's some conceptual framework given. Now see, conceptual framework is the base. I repeat, conceptual framework is the base on which IND AS are built. I repeat, conceptual framework kya hai? It's a base, based on which the IND AS are built. The standards, whenever somebody is building, they need some base. Like in your accounting standard 2, I'm not going to IND AS right now. In your accounting standard 2 inventory, you know inventories are valued at cost or NRV, whichever is lower. Now when I say cost or NRV, whichever is lower, can I say it's nothing but we are trying to follow conservatism concept. So conservatism concept is kind of a base which is taken, based on which that standards were built. So conceptual framework is kind of a base based on which the standards are actually built up. Okay, then we have IND AS, all your standards. One related to presentation. Then there are some standards related to measurement. Then there are some standards related to assets. Okay, revenue recognition, we have IND AS 115. Then some other IND AS. Then we have IND AS which impact the financial statement. You know the word deferred tax. So there's a deferred tax, foreign exchange, uske related standards. Then there are IND AS which are related to disclosures. IND AS related to disclosures. Then we have financial instrument, a very, very important chapter. Financial instruments. So we have a word financial asset, financial liability. What is it? We'll learn later. So that chapter. Then we have business combination. Amalgamations. That's your business combination. Then we have consolidated financial statement. Then first time adoption. Okay, when a company adopts IND AS for the first time, first time when they're adopting IND AS, that's the first time adoption which is coming up. Then we have a chapter called Analysis of Financial Statements. We have a chapter called Analysis of Financial Statements. So financial statements will be given to us. Disclosures, there might be some issue. Schedule 3 disclosures might not have been followed properly. So we rectify the errors, we redraft the balance sheet P&L. I repeat, we rectify errors, we redraft balance sheet P&L. That's analysis of financial statement. And the 16th and 17th are the new chapters which are added under your new syllabus. I repeat, the 16th, 17th, these are the new chapters which were not there earlier. These are newly added. Okay. Now 16th one, professional and ethical duties of chartered accountant. And 17th one, accounting and technology. Actually, both are kind of theory chapters. So both the chapters are kind of theoretical chapters, 16th and 17th. These are newly added compared to your old syllabus. Okay, someone asked me, sir, what is the difference between this new syllabus FR and old syllabus FR? So one main difference is this 2 chapters added, 16th and 17th. And second difference is there are few changes which has been done in the chapters. Few, very few. So one is this 2 chapters added and few changes which has been done in the chapters. That's the only difference. So 2 changes as per the new syllabus compared with old syllabus. Now, sir, what are the weightages of different chapters? I'll tell you whenever we go to individual chapter. I'm not telling you the weightage of each and every chapter right now, but whenever I'll be doing any of the topics, I'll tell you how much is the weightage of that topic generally. Because see, it cannot be like every time weightage is not fixed. It is possible sometimes revenue recognition, that standard came up. Sometimes basically that standard didn't came up also. We have average weightage. So I'll tell you about the weightages whenever we go to the respective standards. Chalo, shall we begin? Shall we start with chapter number 1? Okay, material, if you are not having a hard copy right now, it's absolutely fine. You have a soft copy with you. I'll be highlighting the things in our material. I always want students also to highlight that things. So whenever I'm highlighting or writing something, make sure you are also highlighting, writing that thing. It's very important. That becomes a kind of a summary later on, whatever you are kind of highlighted. Now, the material which is given to you, every material at beginning. You see a chapter beginning, there's a topics covered. So this kind of list will be given, which are the topics which are covered in this standard and in this chapter. So later on, if you want to find out something, it becomes easy for you. Yeah, if you're finding something later on to recall, this becomes very much easier for you. Number 2, the material which I am providing to you, it's an exhaustive material. You don't have to do anything else. It covers all your ICI questions. It covers your suggested answers. It covers your RTPs as well. The RTP, suggested answers, ICI material, everything gets covered. But I still recommend last 3 RTPs, last 3 suggested answers, you should always go through. The reason for going through that is to understand how ICAI is writing the answers. So we have things in our material. But to get that confidence, how is the ICAI writing the answers? Last 3 RTPs, last 3 suggested answers, this is what I need from you. Our material plus last 3 RTPs and suggested answers. Now, the first topic which we are doing over here is Introduction to IND AS. See, in your CA intermediate, you might have heard that IND AS are applicable to entities having net worth 250 crores or more. Yes? So those companies having a net worth 250 crores or more, to them IND AS is applicable. But my first question is, why did this IND AS came up? As of now in India, Yeah, as of now in India, we have a normal accounting standard also, we have an IND AS also. There are two sets of accounting standards. Normal one, IND AS one. What was the purpose? Why did we brought this IND AS? Anyone? Just write it very briefly in 1 or 2 words. What was the need for IND AS? Okay, Naveen says a globalization, Abhilash says a global standards, Srinidhi also says sir at par with the global financial reporting, Ahmed says sir again complying with IFRS, global comparison. Okay, so majorly the word which I found out, a word which you have written is like to compare with the global standards, and that is absolutely the thing. You know, Indian companies have started raising money from world over. In Reliance Industries Limited, they have a subsidiary which is basically Reliance Jio Infocom. In that Reliance Jio Infocom, Facebook has invested, Google has invested, Microsoft has invested, they all have invested. Now, can I say when outside India people, when abroad investors are investing, before investing, they will definitely see the accounts. Without seeing the balance sheet P&L, nobody is going to invest. So whenever they're seeing the accounts, they want to see that the accounts are prepared in a proper manner. See, you follow different concept, they follow different concept, then accounts are not comparable. I tell you a very simple thing. As per your accounting standard 13, AS 13 is on investments, correct? As per AS 13. So as per AS 13, your long-term investments are carried at cost unless there's a diminution which is other than temporary. Okay, so they are carried at cost. Okay. Now imagine there was some investments which were acquired 20 years ago and you still show it in your book at your cost. So you bought the shares of, this article I read few years back, like someone bought a shares of Wipro 30 years back of 10,000 rupees. Yeah, 30 years back, Wipro ke shares someone bought of 10,000 rupees, that is worth 5 crores today. The 10,000 rupees has become 5 crore, but in your books, if it's a long-term investment, can I say it still appears at 10,000? Now, India mein that was the thing, we are following accounting standards. But when I go to IFRS, IFRS is basically UK based. So when I go to IFRS, they don't have basically this cost concept. They more or less have a fair value concept. So in India, that investment is appearing at 10,000. In their book, a similar investment will be appearing at 5 CR. Can I say comparison will not happen? So to have that global comparison possible, to give benefits to the global investors in comparing, we came out with this IND AS. There was a need to have a global standards kind of thing. I repeat, there was a need to have a global standards kind of thing, and to have that global standards, IFRS came, and based on IFRS, our IND AS came. Okay, so let's just check over here, introduction. See, this chapter, starting there's some theory, exam angle, it's not that much important, the theories, but yes, we'll be covering it up, whatever is relevant. So first of all, they are telling that financial statements, they are a key tool of communication. They communicate about what? The financial position, that's balance sheet, financial performance, that's your P&L, and the changes in financial position. So they talk about the financial position and the financial performance. Fine. And whenever we prepare this financial statement, there's accounting standards. So accounting standards are what? They are a set of documents that lay down the principles covering various aspects. The accounting standards are kind of what? Some principles which we are required to follow whenever we are preparing accounts, and they give you what? Recognition, measurement, presentation, disclosure, uske related guidelines. So any accounting standard you open up, it will provide about the recognition, when this transaction should be recorded. Suppose, chalo, PP, property, plant and equipment. So when to record a PP, AS10 will say. What value to record a PP, AS10 will say. How will be the presentation disclosure related to PP, again AS10 will say. So it talks about recognition, measurement, presentation, disclosure of the transaction in financial statement. And the objective of accounting standard is to standardize the diverse policies. Everybody accounting in their own way should not be there. I account in my way, you account in your way. No. For that we have accounting standards. Imagine just, I got some advance received, I just got an order, I'm booking it as sales. Possible. There's another person who is basically booking sales when he delivers, and there's a third person who books sales only when he gets money. So one person is booking sales on order, second person is booking sales basically at the time of delivery, third person is booking sales when actual money comes in. The three different person accounting their own way, that's not correct. We need a uniform thing, and for that we have accounting standards. AS9 says what? You should record revenue when risk and reward relating to ownership is transferred. Same way IND AS 115 will say something. So objective is basically to standardize the diverse accounting policies and you make your accounts more comparable. Clear with this? This is just accounting standards. Okay, in India, who comes up with accounting standards? Anyone? India mein who comes up with accounting standards? Who issues accounting standards? Okay, most of you will say, sir, ICAI. Yeah. Under ICAI, there's Accounting Standard Board. Accounting Standard Board basically develops the accounting standard. They give it to ICAI, ICAI issues it. So, Accounting Standard Board is under ICAI. Okay, then they give it to ICAI, council members of ICAI. Like we have a Prime Minister, President for our country, same in ICAI also. We have a President of ICAI. So council members are also there. Ministers jaise hote hain, yahan pe we have council members. And council members will then be issuing it. Now just remember one thing, whenever ICAI issues accounting standards, it becomes applicable to all entities except the companies. I repeat, whenever ICAI issues accounting standards, it becomes applicable to everyone except whom? The companies. To companies it becomes applicable whenever they are notified by central government in consultation with NAFRA. Okay, so ICAI issues applicable to everyone. Once ICAI issues, central government, if at all they are notifying it, then it becomes applicable to companies. Central government will notify in consultation with NAFRA. Okay, so I just highlight over here, Accounting Standard Board is an accounting standard setting arm of ICAI which formulates accounting standards. So they develop the accounting standard, they give it to council and then council will issue it. Are you clear? Just a basic given about the accounting standards. Now, prior to IND AS, we have this accounting standard. Prior to introduction of IND AS, basically Accounting Standard Board has issued various accounting standards. And you know applicability of accounting standards. For applicability of accounting standards, they have level 1, level 2, level 3, level 4 enterprise. Are you able to recall? Level 1, level 2, level 3, level 4 enterprises, accounting standards applicability. For companies, it is SMC and non-SMC. Correct? Okay. Now, accounting standards were already there. Why did we need IND AS? So, few limitations were there in accounting standards. I repeat, few limitations were there in accounting standards because of which we needed IND AS. See, complex financial instruments are there. How to account for that? Accounting standards were not clear. So if you see over here, what is the limitation of accounting standard? Following were few of the rising complexities which were not dealt properly by accounting standards. The following difficult situations were there which were not dealt properly by accounting standards, and that's why we needed basically IND AS. Plus, for few items, the proper disclosures were not there under accounting standards. For that, we needed IND AS. Okay, the check. Capital being raised in form of complex financial instruments like optionally convertible or compulsorily convertible shares. So we come out with convertible preference shares, convertible debentures. How to account for that? Standards, accounting standards were not giving proper things. So we needed IND AS. Okay, derivative instrument. Okay, what is a derivative instrument? What do you mean by the word derivative instrument? Keep answering. You should be very active. See, derivative instruments are those whose value is derived from the underlying asset. I repeat, the value is derived from underlying asset. Okay. Now, if I ask you, you heard the word futures and option? You heard the word futures and option? Okay. So, if at all I'm buying a gold future, so gold future ka rate will depend on gold. So, underlying asset is gold. I have agreed with someone that I'll be buying gold from him after 3 months or after 6 months. So, uska value after 3 months or 6 months, I'll be buying gold from him. It may be a fixed rate. If it's a fixed rate basically done by us, it's a forward contract. If fixed rate is not done, just a contract done, I'll buy after 3 months, whatever rate goes on that time. So that gold future ka rate depends on basically the gold, underlying asset. So derivative instruments, again uska accounting was not properly dealt with by accounting standards. Group restructuring, business acquisitions, mergers, slump sales, they were not properly under accounting standard. Complex revenue arrangements, they were not covered properly. Okay. Then complex tax provisions, uske treatment, different ways to provide shareholders a return, investment in kind of an event of a group reorganization. The simple words, some complex treatments were not there under your accounting standards, and such transactions were now there. So complex transaction came up, but accounting is not there in accounting standard. So there was a need to have this IND AS. Plus, further, there was a need to have a comprehensive disclosure in order to provide investor a complete overview of the business background, risk involved, etc. etc. So, accounting standard had a limited disclosure. IND AS mein there are vast disclosures. Accounting standard had a limited disclosures. IND AS mein there are more disclosures. So, that was the reason again IND AS was required. So this is actually limitations of accounting standard. Problem, complex treatments were not covered, and number 2, adequate disclosures were not there. Shall I move ahead? I know it's a bit theory, but you have to bear with it. Thoda hai bas. And then we'll go back to the sums. Now, so we understood that people have started raising money from world over, and now we need a global standards. Okay, we needed a global standard. So don't say, sir, IND AS is a global standard. No, IND AS is not a global standard. Actually, IFRS came, and based on IFRS, then IND AS came. So what happened is, in 1973, a London-based group, it was called IASC, International Accounting Standard Committee. They basically came up and they came out with international accounting standards. Okay, so 1973. There was IASC formed, and there were professional accounting bodies of Canada, Australia, France, Germany, Mexico, Netherlands, UK, Ireland, all that involved in that. And the goal was basically to come up with a good quality accounting standards. Actually, they came out with international accounting standards. Okay. Now, in 2000, there was some restructuring done, and this IASC, International Accounting Standard Committee, it was converted to IASB, International Accounting Standard Board. ठीक है, तो IASB हो गया. तो earlier it was IASC, then it is IASB. Now pay attention. So 1973 IASC was formed, and they came out with International Accounting Standards, IAS. Okay, in 2000, IASC got converted into IASB, and now IASB issued, see the word which I am writing, additional standards known as IFRS, International Financial Reporting Standards. Okay, so 1973 we had IASC coming, they came out with IAS, International Accounting Standards. 2000 में IASC got converted into IASB, and IASB issued additional standards known as IFRS. Okay, my question, with IFRS coming, whether IAS is gone, with IFRS coming, whether IAS are gone? Yes, no, Y or N? With IFRS coming, whether IAS are gone? Answer is no. So see, clearly this word I have written is, these are additional standards. So IAS are still there. I repeat, IAS are still there. International Accounting Standards are still there, and now we also have IFRS. Now practically when we use the word IFRS includes IFRS as well as the IAS. When we use the word IFRS, it includes IFRS as well as IAS. Clear? Chalo. We have all these things, don't worry about it. Now, IASB members are responsible for developing IFRS. ठीक है, IFRS are what? They are kind of a global standards which everybody wanted. Okay, so now, in 2002, a European Parliament, so EU, European Union, that Parliament, they passed basically a resolution wherein every European country has to adopt the IFRS. So mandatorily all European countries followed IFRS, and then it spread across the world. Everybody followed it later on. ठीक है, तो July 2002, a regulation was passed by European Parliament requiring adoption of IFRS, and all listed companies in EU, European Union, they were required to follow IFRS from 2005. ठीक है. Now, I told you IFRS is UK based. IFRS is UK based. So now, sir, in US also, whether IFRS is there? In US, whether IFRS is there? Answer is no. We have a US GAAP. I repeat, we have US GAAP in US, and IFRS is basically UK wala thing. So two main, world over, US GAAP is there, and basically your IFRS is also there. And there was one project done wherein they tried to eliminate the difference between both. Yeah, there was a project also done. They tried to kind of bring both of them nearer. Okay, still there are difference between US GAAP as well as your IFRS, but some of the differences they removed at that time. The two most prominent and widely adopted accounting standards, one is a US GAAP, US Financial Accounting Standard Board issues, FASB, and second is IFRS. These are the two main which are there. And there was a joint convergence project also to eliminate the variety of differences between your IFRS and US GAAP. So there was a project done basically by FASB as well as your IASB. FASB is US wala, IASB is UK wala, and there was a project done by them to harmonize their standards, also eliminate the differences. Few they've eliminated, few are still there. So IFRS is now, together with US GAAP, one of the two globally recognized financial reporting framework. So we understood world over IFRS scheme. We have not yet reached to IND AS. We understood world over IFRS scheme. Now, why there was a need for a global standard in India? The need for global standard in India, I just now told, Reliance raised money from all these people which are outside India. So we have started raising funds from world over. Funds are being raised from world over. So international analysts, international investors, they basically want accounts which are comparable world over. So check, modern economy rely on cross-border transaction and free flow of international capital. Cross-border transaction, free flow of international capital. So companies are raising money from world over. Investor seeks diversification, investment opportunity across the world, and they raise capital. In multiple countries. Okay. Applying local accounting standards will lead to a totally different basis for the amounts appearing in financial statement. Imagine if you are maintaining books as per normal accounting standards which are in India, and if you are maintaining books as per IFRS, can I say two totally different picture will come up? This follows cost concept, they follow fair valuation concept. So things will not match. So maintaining multiple set of accounts is also a problem. So there might be a increased cost compliance of maintaining multiple set of financial statement. See, when investor is abroad, they need things as per IFRS. If you say, I give you as per my accounting standard, they say, no. You prepare accounts as per IFRS again. So if you are preparing two times different multiple set of books, that's also a problem. If you apply only a local standard, that's also a problem. And picture will be totally different. यहाँ पे investment is at 10,000 rupees, वहाँ पे investment might be 5 CR. I told you example about cost concept and fair valuation wala concept. So international investors, they wanted basically as per the global accounting standards, kind of IFRS. So with this emerging need to move AS to global standard and considering the limitation of accounting standards, it was basically required to come up with standards in India which are based on IFRS. The international investors apprehensive to rely due to the limited understanding of accounting standard often sought the companies. The international investors often required the companies to prepare financial again as per IFRS. So you are in India, you are following AS, no, you please give us basically financial as per IFRS. So we had to do two things, and that's why India made a commitment to converge to basically our IND AS or come out with IND AS. We basically decided this in 2009 in G20 summit. G20 is basically a 20 countries ka group. The G20 summit mein we decided we will be also coming out with our set of standards which are based on IFRS. Shall I move ahead? This theory is all fine, don't worry about it. Not much important from exam angle, but we should do it. We should be able to know the background, how this all things have came up. Now, benefits of global accounting standards. If I have a global standards, what are the benefits? One, comparability increases. Number two, global investors, they feel ease. Okay, our accounts are fine. It's comparable world over. I can understand it properly. So global standard brings transparency, enabling investors to make a proper decision. ठीक है. They strengthen accountability by reducing the information gap between providers of capital and people to whom they have trusted their money. Okay, so my money I've given to you, there's no information gap between us. I understand the accounts, I understand everything. They are basically on a global thing, so it becomes easier. And this global standard help investors to identify the international opportunities, risk across the world, and they are able to do a better allocation of the capital. So there's just few advantages of your global accounting standards. Now coming to the word IFRS. I'll be coming to word IFRS, then I'll go to the word IND AS, and then we have all about applicability of IND AS. It becomes simpler. Now I told you, first of all, there was International Accounting Standards, IAS, which were issued by IASC, International Accounting Standard Committee. And then IASC was restructured and it was IASB. IASB came up with IFRS, and IFRS are the additional standards. So with IFRS coming, your IAS are not gone, they're still there. And practically when I say IFRS includes IAS as well. So check out, the term IFRS comprises of, IFRS which are issued by IASB, IAS issued by IASC. I told you IFRS also includes IAS. Now, whenever your standards are ambiguous, if at all standards are ambiguous, can I say there might be some interpretations coming up? The standard may some ambiguity there, people are not able to understand, interpretations are issued. That interpretations are also included in the word IFRS. So interpretations issued by SIC, that is Standard Interpretation Committee, and interpretations issued by IFRS Interpretation Committee. Earlier there was SIC, now there is IFRS Interpretation Committee. So IFRS includes IAS, IFRS and interpretations related to both. ठीक है जी? Anywhere if you're stuck up, please stop me at the same time. Now, your IFRS, they are a kind of principle based standard. I repeat, your IFRS are principle based. They are not rule based, they are principle based. They outline basically a principle. You have to apply that principle based on facts and circumstances. Okay, now tell me, when do I say I have a subsidiary, I have a control? I repeat, when do I say I have a control over this entity? You've done it in your accounting standard 21. When do I say we have a control over that entity? When do we say we have a control over that entity? Sir, when we hold more than 50% of voting power. ठीक है? तो Abhilash says, sir, when we hold more than 50% voting power. So normally we say we have a control when we hold more than 50% voting power. Now I have a question. There is A Limited. Okay, in that A Limited, Mr. A holds say 45%. And there are others. Thousands of investors. Okay, others में there are thousands of small investor. Nobody holds even 1%. Okay, there are thousands of small investors. Nobody is holding even 1% also. Okay? Naveen, the word significant influence is different. When I say control is normally when you hold more than 50%. Significant influence comes when you're holding more than 20%. Okay, so now there is A Limited, Mr. A is holding. There's A Limited, Mr. A is holding 45%. Others are thousands of small shareholders. Everybody holding 0.01%, 0.02%, 0.03%, 0.05%, not 1%. Anybody is, none of them is holding 1%. All are very small shareholders. Now I have a question for you. Can I say decisions are taken in a meeting? Whenever that AGM is there or EGM is there, the decisions will be taken in a meeting. Now, do you think this small shareholders, they will come and attend the meeting? Do you think the small shareholders, they will come and attend the meeting? No, sir. So normally, okay, normally in meeting, so whenever there is a AGM or EGM, shareholders holding around 60% to 70% attend meeting. Okay. So out of all shareholders, all are not coming. Few people come. Okay, a big one will always come. Mr. A will always come. He holds basically what? 45%. And others may around small, few people come. So every time we have seen, I'm not talking about one last AGM. Track record. If you see a track record, shareholder holding 60 to 70% come and attend the meeting. Now, voting is basically by those who are attending. Out of 60-70% who are attending, can I say this 60-70 may say 45% is with Mr. A? Okay, so my question, would Mr. A be able to take the decision which he wants? So shareholders holding total around 66-70% they are attending. Usme se Mr. A is holding 45. Would Mr. A be able to take the decision which he wants? Yes, no. Would Mr. A be able to take the decision which he wants? Yeah. So can I say even with 45%, he can take decision which he wants? Can I say he's able to have a control? Even with 45%, he's able to have control. Yes, no? Now, same thing I change. So यहाँ पे under IFRS, Mr. A is said to have a control, even with 45%. So under IFRS, even with 45%, Mr. A is said to have control because this is what actual is. Now, same thing, but I change. Now, suppose Mr. A holds 45%. Okay, there is Mr. B and there is Mr. C. B holds 30, C holds 25. Okay. So now there are not thousands of small investors, and there are no, this is over, this is separate case. So earlier there were thousands of small investors, they were not coming and attending meeting. So Mr. A was able to take decision whatever he wants. But now there is A, B, C, 100% divided between them. Now tell me, would A be able to take the decision whichever he wants? No, B and C can come and vote against him. Here B holds 30, C holds 25, they can come and vote against him. If B and C vote against him, can I say 30 plus 25, B and C will have a majority, A will not be able to take decision which he wants. So in the first case, A was able to take the decision whichever he wants with 45%. But in this case with 45%, A is not able to take decision which he wants. So here in the first case with 45%, he has a control. But in the second case with 45%, he does not have a control. The first case with 45% control is there. Second case with 45% control is not there. So I told you IFRS are principle based. They have to be applied based on facts and circumstances. Here facts and circumstances suggest that he has a control. Here facts and circumstances suggest he does not have a control. Did you got it? Okay, so IFRS are basically your principle based set of standards. They establish the broad rules rather than dictating a specific treatment. Under IFRS, you don't need 50% basically to have a control. Even with 45%, you may have a control. I'm not telling you will have, you may have a control depending on facts and circumstances. So under your IND AS 110, it is not mandatory to hold more than 50% voting power. Okay? It's principle based, and every major nation is moving towards IFRS. Okay. Every major nation is moving towards IFRS. So now question comes, I understand everybody wants to move to IFRS. If I want to move to IFRS, there are two options. How to become IFRS compliant. So two options. Either you adopt IFRS or you converge to IFRS. Okay, I repeat. Either you adopt directly whatever is there in IFRS. We are following IFRS. If I say I'm following IFRS only, IFRS are valid in our country, so that's adopting. If I say IFRS becomes valid in our country, that's adopting. Convergence is you come out with your set of standards. I repeat, convergence is we come out with our set of standards which are based on IFRS. Okay, now tell me, India. Did India adopted IFRS or did India converge to IFRS? Adoption is we directly say, okay, IFRS valid here. Conversion is we come up with our set of standards which are based on IFRS but are bit modified as per our country's scenario. So whatever is required in our country, we bit modified based on our country's scenario. Okay. So what did we do? We adopted or converged? Okay, Abhilash says a converged. Converge. Okay, thank you. All of you are correct. So adoption means you directly adopt it. Conversion means you come up with a high quality compatible accounting standards. Compatible means compatible with IFRS. Okay, the accounting standards are almost similar to IFRS, but there are few changes which are done to make it suitable for Indian environment. Okay, the countries like Canada, Bahrain, Cambodia, they have adopted IFRS. Countries like India, China, Hong Kong, they have converged to IFRS. Okay, so see the definition of IND AS. IND AS are what? See the definition of the word IND AS. IND AS are what? IND AS are IFRS converged standard. Okay, see anything which is important will be marked as important in your material. यहाँ पे लिखा ही होगा. I repeat, anything which is important will already be marked as important in your material, so you don't have to search here and there which is an important topic, not an important topic. Everything will be highlighted. If any sum is also important, in sum also it will be written this is important. ठीक है. So IND AS are IFRS converged standard issued by Central Government of India under the supervision and control of Accounting Standard Board of ICI and in consultation with NAFRA. Okay, so IFRS converged standard based on IFRS issued by Central Government, supervision and control of Accounting Standard Board of ICI in consultation with NAFRA. Did you got this definition? What is IND AS? IFRS converged standard issued by whom? Central Government under supervision and control of Accounting Standard Board of ICI in consultation with NAFRA. Now our IND AS, they have names and number. They have a name and number same way as IFRS. Okay, so whatever is name number of IFRS, same thing over here also the name numbers are same. Now tell me, do we have practically only IFRS or we have IAS and IFRS? Can I say we have both? Okay. IAS, it's 1 to 41. And there's IFRS 1 to 16 currently. Okay, so IAS is 1 to 41. IFRS is 1 to 16. Now, can I say both are included actually in the word IFRS? So, in India, we have IND AS 1 to 41. IND AS 1 to 41. This is basically your IAS 1 to 41. Now, IFRS 1 to 16, I cannot write IND AS 1 to 16. If I write IND AS 1 to 16, it will become duplication. Here also IND AS 1 to 16 came. Here what happened is above, one is IAS, other is IFRS, two words were different. So then we have 101 to 116. So one is IND AS 1 to 41, which corresponds to IAS. So IAS 1 to 41 is IND AS 1 to 41. IFRS 1 to 16 is IND AS 101 to 116. Did you got it? Okay, so IFRS 1 is IND AS 101. IFRS 10 is IND AS 110. IFRS 16 is IND AS 116. Okay, IAS 1 is IND AS 1. IAS 10 is IND AS 10. IAS 40 is IND AS 40. So this is how basically the names are there. So its name, number, everything is same. It's almost a replica, few minor changes done as per Indian environment. ठीक है. So check out IAS 1 to 41 are IND AS 1 to 41, and IFRS 1 to 16 is basically your IND AS 101 to 116. Now, in your IAS and IFRS, remember we had basically interpretations. So interpretations by SIC, interpretations by IFRS Interpretation Committee. So they had interpretations. We don't have interpretation. Sir, kahan gaye? They have interpretations, we don't have interpretation. We don't have interpretation because it's given in form of appendix to the standard. So IFRS or IAS ke interpretations are not there in IND AS because they are covered as a part of appendix under the relevant IND AS only. Under relevant IND AS we have appendix, under the appendix they are covered. Any doubts? Keep smiling, keep replying. One more thing, lots of water keeps you fresh. So every 15-20 minutes, one sip of water. Yeah. Have one sip of water every 15-20 minutes, you'll keep fresh, you'll not feel kind of sleepy. Now, there's a word called carve in, carve out. I repeat, there's a word called carve in, carve out. Ye kya hai? See, we understood IND AS or IFRS Converge standard. We have done bit modification as per Indian scenario. Bit modification. Okay. So whenever you do modification, so it is possible there might be a treatment given in IFRS, but in IND AS we have changed it. So there's a treatment given in IFRS, but under IND AS we have changed it. For example, business combination, amalgamation, one company taking over another company. Okay, if you have a gain, see, you take over a company, uske net assets are 100, you're paying 90. You took over a company, net assets 100, you're paying 90. Can I say 10 rupee ka gain? Then we gain on amalgamation. Where do you take it? Amalgamation may gain. Where do you take it? Okay, if I pay more under amalgamation, it's debited to goodwill. If I pay less under amalgamation, where do we credit? Okay, Srinidhi has a question. Sir, is US GAAP, IAS and IFRS same? Dear, first of all, IAS and IFRS, they are same only. One thing, they are not different. Repeat, IAS and IFRS, wo same hi hai. It's not different, first of all. IAS, IFRS. US GAAP is different. US GAAP is basically different. Now, sir, what is the difference basically between US GAAP and basically our IFRS? So that basically you'll be learning in subject called Global Financial Reporting Standard. If you're taking a GFRS subject, optional one, so you learn difference between US GAAP, IFRS, that is over there. As such, majority things are same, but a few things may difference come up. Okay, now I got the answer that, sir, whenever basically we amalgamate and we are paying less, we take it to capital reserve. Srinidhi says, sir, general reserve. Answer is no, not general reserve. We take it to capital reserve. So gain on amalgamation is taken in capital reserve, but under IFRS, they take it to P&L. IFRS mein they are taking in P&L. Under IND AS, we are taking it in capital reserve. So they are telling Indian scenario mein better is to take it to capital reserve, don't take to P&L. So can I say treatment differed? IFRS says P&L, we are taking it in capital reserve, what difference ho gaya? So that's carve out. I repeat, what is carve out? Something which is followed under IFRS. Treatment in IFRS, we change it. Usko change kar diya. That's carve out. Something given in IFRS, we changed it. The treatment of IFRS we are not following, we are changing it. So they take basically in P&L, we are taking it in capital reserve. Carve out. Okay, now suppose under IFRS there are two options. They say either you take here or you take here. IND AS mein suppose we follow only one thing, we don't give option. So IFRS mein there are two options, we are not giving option, we are giving only one thing, then it's not carve out because still what we follow is what is there in IFRS. IFRS mein two option, we are not giving two option, we are giving only one thing. But still, can I say what we are following is what is there in IFRS? So out of two option, we remove option, that's not carve out. But they take in P&L, we change it only. We change it and we make it capital reserve, that's carve out. Okay, now second, carve in. What is carve in? Something which we added, which is not there only in IFRS. Okay, there is something which is not there in IFRS, we added it. So we included it in IND AS, but that thing is not there only in IFRS, that's called carve in. You added something which is not there in IFRS, that's carve in. Okay, the check. Certain changes has been made considering the economic environment of the country. They are known as carve out. Okay, second, additional guidance which we give over and above what is given in IFRS. Something which is not there in IFRS, we added. Something which is not there in IFRS, we added is carve in. So something which is there in IFRS, but we change the treatment, that's carve out. Something which is not there in IFRS, we added, that's carve in. Clear? Carve in, carve out. Okay, removal of option. If I just remove the option, it is not carve out. So they have two options, we give only one, but still what we are following is what is there under IFRS. The removal of option is not carve out. Okay, some name changes are also there. Some name changes are also there, like we call it as a balance sheet, they call it as statement of financial position. So some terminology related changes. Example, we call it as balance sheet, they call it as statement of financial position. Okay, I'll just put a star here and write down at the top. Something which is there in IFRS but under IND AS we changed its treatment. Will be carve out. Okay, something which is not there in IFRS but we added in IND AS. Will be carve in. Is it clear? Okay, let's move ahead. Carve in, carve out is done. Now, process of development and finalization of your IND AS. So, how are IND AS developed? First of all, your accounting standard board. Actually, let me just write over here in a simpler way. No need to write down, it's there in material, just pay attention. So, first of all, accounting standard board is there. Under that, they have study groups. And they prepare the draft accounting standard. They prepare the draft standard. Okay. Then the draft standard is circulated to council members of ICA, plus the specified bodies like RBI, SEBI, stock exchanges, Institute of Company Secretaries, Institute of Cost Accountants. It is circulated to everyone, specified bodies. There's also meeting with specified bodies. Okay, after this, exposure draft comes up. So council members and VIPs comment we took. Based on that, we made some changes. Now we have an exposure draft. पहले draft था, उसको बोलते हैं preliminary draft. Actually, this is not draft. This is a preliminary draft. So preliminary draft. Then we have an exposure draft. Exposure draft will be exposed to public at large. Exposure draft. This is hosted on ICAI website. And public can also comment. Okay, after this exposure draft, a final draft comes up. So based on the comments, any changes are required, we make a changes and final draft. The final draft goes to basically the council of ICI. If council wants to make changes, they'll make changes. Then council gives it to NAFRA. NAFRA will basically see it. NAFRA may tell you to change, and then NAFRA will give it to government. Government notifies. Okay, so after this, a final draft basically goes to council to NAFRA to CG, and CG issues. इसके बाद there's a final draft. It goes to council to NAFRA, and NAFRA to CG. This is the entire process, how it will be there, starting with preliminary draft. The accounting standard board, they have a study groups. They will come out with a preliminary draft. Preliminary draft, they give it to accounting standard board. ASB will then basically circulate to council members as well as the specified bodies. They will have a meeting with specified bodies. Now preliminary draft is now changed to exposure draft. It will be exposed to public at large, hosted on ICI website. Based on the comment, a final draft is prepared, which will be given to the council. Council may make changes. Then it goes to NAFRA. NAFRA may also tell you to make some changes, and then it goes to central government, where central government will notify it. Clear? Okay, now let's see. Okay, सबसे पहले there's a preliminary draft prepared by ASB. Circulation of draft to the council members as well as specified outside body like SEBI, C&AG, CBDT, etc. There's a meeting with the representative of the specified bodies as well. Now exposure draft comes up. Exposure draft comes up, which is for public comments. This is for public comments. Okay, after that, basically a final draft comes up, and final draft is submitted to NAFRA. NAFRA reviews and gives any input to ICI before finalizing. And then MCA, Ministry of Corporate Affairs, will notify the IND AS to be followed by the company. So see, council will issue the standard, but MCA has to notify it. Once MCA notifies, then only it becomes applicable to companies. Any doubts? Anybody with the process? Any doubts? Anybody with the process? Okay, now next is structure of your IND AS. Next, structure. What are the things which are covered under your IND AS? So first of all, every standard will have an objective. What is the purpose of this standard? Like suppose accounting standard 2. Accounting standard 2, the objective will be to prescribe the accounting treatment for inventory. So objective, scope, it covers what? So this will cover inventory. Definition. Okay, so inventory ka definition, NRV's definition, so few things that will be covered. So objective, scope, definition, content. इसके अंदर principles of recognition, measurement, subsequent measurement, etc. Disclosures, transition provision, when you're shifting from AS to IND AS, when you're shifting, how to apply the standards whenever you're shifting, that's basically your transition provision. Effective date, the standard is applicable from which date. And then appendices, so extra appendices, explanation on some industry specific issue, application guidance, some extra terms which might be defined over here, reference to some matters which are there in some other IND AS, comparison with IFRS, and that interpretations whichever applicable, the interpretations are given as a part of appendix. I told you that it's over here. So structure is about one, you have objective, then scope, then definition, then content, disclosure, transition provision, and the appendix. Okay, Srinidhi has a question. Sir, whatever NAFRA says, can ICAI disagree? Now see, NAFRA is basically from government side. So what will happen is if NAFRA is saying something, you want to argue, it is always a kind of a communication which is done and we try to explain them. It cannot be like if NAFRA says something and we say no directly. If at all you're not agreeable, you can tell to them, you try to convince them. If you're not able to convince them, then whatever NAFRA is telling, you have to incorporate reason. If you don't incorporate, MCA will not notify that standard. If MCA doesn't notify that standard, it doesn't become applicable. Are you clear, Srinidhi? So mandatorily we have to do it. It cannot be like we disagree. Okay, so this is a structure basically of your IND AS, and now comes the important thing, roadmap for implementation of IND AS. Now questions will come. Roadmap for implementation of IND AS. Now see, IND AS are only for companies. I repeat, IND AS are only for companies, sole proprietorship, partnership, trust, HUF. They all are not required to follow IND AS irrespective of turnover. It's only for companies. Okay, phase 1 starting May, it was for other than bank, insurance, NBFC. NBFC is non-banking finance company. You know, Muthoot Finance, Bajaj Finance, they are NBFCs. So it is for only for companies. And that too other than bank, NBFC, insurance company. Sir, bank, NBFC, insurance company, do they have to follow IND AS? I'll come to it. So for companies other than, other than bank, NBFC, insurance company. Okay, 1,415 onwards, it was voluntary. Any company voluntarily wants to follow IND AS, they can follow it. 1,416 onwards, few mandatory. Okay, the few companies it's mandatory, others voluntary, they are allowed. Okay, if I want to voluntarily follow IND AS, can I follow? Yes, you can follow. Okay, 1,416 onwards. So 1,415, it was voluntary. 1,416 onwards, it's applicable to whom? Listed on recognized stock exchange, BSE, NSE. So listed, unlisted, both having a net worth, not turnover. Listed, unlisted, having a net worth 500 crores or more. So listed, having net worth 500 crores or more. Unlisted, having net worth 500 crore or more. Simple words, listed ho ya unlisted ho, if your net worth is 500 crores or more, it applies to you from 1,416. And if it applies to you, if IND AS is applicable to you, it applies to your parent, your subsidiary, your associate, your joint venture. I repeat, if IND AS applies to you, if it applies to you, it applies to your parent, your subsidiary, your associate, your joint venture. Okay, subsidiary is where you have a control. Subsidiary mein you have a control, you hold more than 50%. Associate, you have a significant influence. And joint venture, you have a joint control. Okay, I just put a star and I write down at top. Okay, subsidiary, you have a control. And it's generally when you hold more than 50%. Okay. Associate, you have a significant influence. This is generally when you hold more than 20%. Joint venture, you have a joint control. Your joint control, A Limited, B Limited, they formed AB Limited. A Limited, B Limited formed AB Limited, and AB Limited is controlled by A and B both together. AB Limited is controlled by A Limited, B Limited both together. A alone cannot do anything, B alone cannot do anything. Both have to take a unanimous decision. Clear? Okay, now, very interesting. Imagine there is A Limited. No need to write, it's already there in your book. It has a subsidiary B Limited and C Limited. B has a subsidiary X Limited. B has a subsidiary X Limited. Now, B Limited has net worth greater than 500 crores. Okay, so now to which all companies IND AS applies? To which all companies IND AS applies? So B has a net worth more than 500 crore. Can I say IND AS applies to B? B has a net worth more than 500 crores, IND AS applies to B. Now, if it applies to you, it applies to your parent, your subsidiary, your associate, your JV. Okay, who is your parent? Who is the parent of B? Sorry. Who is your subsidiary? Sir X. If it applies to you, it applies to your parent, your subsidiary. Okay, who is your associate? B का? नहीं. B का associate नहीं है. B का JV नहीं है. Sir, C is a subsidiary of your parent. C is a subsidiary of your parent, not your subsidiary. I told you, if it applies to you, then it applies to your parent, your subsidiary, your associate, your JV. So whether it applies to C, answer is no. Did you got it? Whether it applies to C, answer is no, but what will the problem come up? So C Limited as such can follow accounting standards for its standalone purpose. But see, when A Limited is preparing a CFS, I repeat, when A Limited prepares a CFS, can I say A as a subsidiary C? If A prepares CFS, IND AS are applicable to A. So whenever A is preparing a CFS, the IND AS is applicable. Consolidated financial statement should also be as per IND AS. The figures coming from C should also be as per IND AS when A is preparing CFS. When A is preparing CFS, the figures coming from C should also be as per IND AS. So see, practically, if you see, C Limited have to give data as per IND AS for the purpose of consolidation. As such, IND AS doesn't apply. As such, IND AS doesn't apply to C, but for the purpose of consolidation to its parent, I'll have to give data which is as per IND AS only. So, I have to maintain dual set of books. So, C will be required to maintain dual set for standalone purpose AS, but for the purpose of consolidation, I have to give data as per IND AS. So better, yeah, rather than following two set of book, let me voluntarily follow IND AS. So C will voluntarily follow IND AS because it will anyways need IND AS wala data to give it to A for the purpose of consolidation. Are you getting it? But if I go by the rules, it applies to B, it applies to A, it applies to X, it does not apply to C. Because it applies to you, it applies to your parent, your subsidiary, your associate, your JV. C is not your parent, subsidiary, associate, JV, it's your parent's subsidiary. Any doubt? We have a similar question, so no need to write. Okay, coming back. Okay, so one who are listed having a net worth 500 crores or more, unlisted having a net worth 500 crores or more, and parent, subsidiary, associate, JV of above your parent, your subsidiary, your associate, your JV. Okay, this was 16. Now 17 onwards, all listed, irrespective of net worth. Now all listed. So sir, I'm a listed entity, net worth is 10 crore. I'm a listed entity, net worth 10 crore, 1 for 17 onwards applicable in this. All listed or in process of listing, both are covered. Unlisted having a net worth 250 crores or more. Acha, so 1 for 17 onwards, all listed. Unlisted में net worth 250 crores or more, they are only covered. It's 250 crores or more. So it's greater than equal to 250 crores or more. Exact 250 covered. Exact 250 है तो covered. So listed all, unlisted net worth 250 crores or more. And same if it applies to you, your parent, your subsidiary, your associate, your JV. Any doubts? Okay, now Nikita has a question, sir, net worth of which date should be considered? I'm coming to it. Okay, Nikita, net worth of which date to be considered? I'm coming to that point. Any doubts other than that? Okay, now when I say listed, you should be listed on recognized stock exchange, BSE, NSE. Now, in your BSE, there is also one exchange called Small and Medium Enterprise Exchange, SME. There's a BSE, SME, Small and Medium Enterprise Exchange. So, if you are listed on SME exchange, then it's not applicable. So, if you are listed on SME, so see clearly word written other than listed on SME exchange. If you are listed on SME exchange, it doesn't apply to you. That's one. Achha, sir, what if I'm not covered above? Imagine I'm an unlisted one, net worth less than 250 crore. I'm unlisted, net worth less than 250 crore. I'm not falling above. If you're not falling above, you just have to follow the normal accounting standard. So with IND AS coming, normal AS are not gone. See, IND AS is only for big companies. Reason, they raise money from abroad, they have international investors, all that things. Small companies don't have all that things. So this is actually only for big companies, not for small. So if you're not falling above, you are covered by the normal accounting standard. Company is not covered above, continue to follow the normal accounting standard. So many people feel, sir, IND AS will come, normal accounting standard will go away. No, both will remain. The normal accounting standard will be for small companies, IND AS are for big companies. Acha, sir, can I apply partly AS and partly IND AS? For SFS I do AS, for CFS I do IND AS. No. Part are not allowed. If you're listed on SME exchange, no need to apply your IND AS. It applies to both your consolidated and individual. That's your separate financial statement. Plus, whenever you start applying, you need a comparative information of minimum 1 year. Acha, whenever you start applying, you need a comparative information for 1 year. Imagine, if you are required to follow IND AS from 1416, net worth 500 crores or more. If you are required to follow IND AS from 1416, effectively, you will be following from 1415. Sir, kaise? I have to follow from 1416. The previous year data will be 1516. That also has to be as per IND AS. So effectively, it turns out to be from 1415. If you are covered here in phase 1, so 1st April 16, effectively previous year is from 1415, so that also needs to be as per IND AS. Okay. And very important, once applicable, your IND AS will be applicable for lifetime. Once applicable, IND AS applicable lifetime. Okay, pay attention. I go back here. Remember this question? Okay, B has a net worth more than 500 crore, IND AS applies to B. IND AS applies to B. If it applies to, it applies to your parent, your subsidiary, your associate. Now, can I say X is a subsidiary? So IND AS applied to B, X is a subsidiary, IND AS applies to X. Now, suppose later B Limited sold off X. Later B Limited sold off X. So earlier I was a subsidiary of B, IND AS applied to me. Now I am not a subsidiary of B. Now I am not a subsidiary. Earlier I was a subsidiary, IND AS applied to me, but now B Limited sold off X. If B has sold off X, can I say now X is no longer a subsidiary of B? Whether X still has to follow IND AS? Whether X Limited still has to follow IND AS? Answer is yes. Once applicable, it will be applicable lifetime, even though you start following it voluntarily also, once you apply, it has to be applied lifetime. Clear? Keep replying. I want answers from everyone. Thank you. Okay, if IND AS applies to you, it also applies to your parent, your subsidiary, your associate, your JV. Your parent, your subsidiary, your associate, your JV. Okay, subsidiary is also your subsidiary. Subsidiary is your subsidiary only, so it applies to them. It applies to them. Acha, now imagine there is A Limited, they have a subsidiary B, they have a subsidiary C, they have X and Y. One is a subsidiary, one is a JV. Okay, B ka net worth greater than 500 crore. ठीक है? Okay, B's net worth greater than 500 crore, it applies to B. If it applies to B, it applies to B's parent, B's subsidiary. Your parent, your subsidiary, your associate, your JV. Okay, so B's parent A, B's subsidiary C. Now X is C's subsidiary. Subsidiary is also your subsidiary. Subsidiary is also your subsidiary. It applies to X. Okay, now Y is a JV of not your. Y is not your JV. Y is your subsidiary's JV. Y is not your JV. Y is your subsidiary's JV. It doesn't apply to Y. Did you got it? Subsidiary is my subsidiary, but subsidiary's associate, subsidiary's JV is not my associate, my JV. Clear? We have questions like this, no need to write. Okay, so subsidiary is also our subsidiary. IND AS will apply to sub-subsidiary. But IND AS will not apply to associate JV of the subsidiary associate JV. So subsidiary's associate is not our associate. Subsidiary is our subsidiary. Subsidiary is our subsidiary, but subsidiary का associate is not our associate. ठीक है. But I told you, if you just see over here, Y doesn't have to follow IND AS. But can I say Y का parent C? Y doesn't have to follow IND AS, but Y's parent C. C will follow IND AS. When C will prepare a consolidated financial statement, C will follow IND AS. So C will prepare a consolidated financial statement. It needs data from Y based on IND AS. When C will prepare a CFS, C will need a data from Y which will be as per IND AS. So actually Y has to maintain dual set of books. One for standalone purpose. They have to follow basically AS. But for giving figures to their parent for CFS, they have to follow IND AS. So voluntarily, Y should follow IND AS. It will be better for them. Okay, Akshat has a question, sir. Our associate subsidiary, dear, associate ka subsidiary is not our subsidiary. Subsidiary is our subsidiary. Did you understood? Our associate's subsidiary is not our subsidiary. Fine. Okay. So here it's written as parent will follow IND AS. The consolidated financial statement should also be as per IND AS. So associates and JV of the subsidiary associate JV may not follow for SFS, but for the purpose of CFS, they have to give figures to their parent as per IND AS. So such entities may be required to have a dual set of books of accounts, or voluntarily they will follow IND AS. Clear? So this point is important. Now, I have a question. Chalo. B has a net worth more than 500 crore. IND AS applicable to B. Now it's not A Limited, it's A INC. The holding company is A INC in UK. Now I told you if IND AS applies to you, it applies to your parent, your subsidiary, your associate, your JV. But if your parent is abroad, then in that case it doesn't apply, because they will prepare accounts as per their country's rule. If parent is abroad, then it doesn't apply, because they will prepare the financial as per their country's rule. They can't prepare as per IND AS, right? If parent abroad, not applicable. Same way, subsidiary abroad. Imagine this is not C Limited. This is C INC UK. So subsidiary abroad, they have to prepare financial statement as per their country's law. So to them also IND AS doesn't apply. Parent abroad, IND AS doesn't apply. Subsidiary abroad, IND AS doesn't apply for SFS purpose. Subsidiary abroad, IND AS doesn't apply for SFS purpose. But can I say when B is preparing CFS, we need data from C which has to be as per IND AS. When B prepares CFS, we need data from C. We don't need data from parent. When I prepare CFS, I need data from my subsidiary. So when B prepares CFS, B will need data from C, which will be as per IND AS. So C is in UK for the SFS purpose, they follow their country's norm. But for the purpose of consolidation, they have to give me data which will be as per IND AS. Are you clear? So for the purpose of consolidation, C will be required to give data to B, which will be as per IND AS. So indirectly, C has to maintain dual set of books. Okay, so check over here. Overseas subsidiary, associate, JV of Indian parent. They can prepare financial statement in accordance with the specific jurisdiction. Indian parent has to prepare CFS as per IND AS if IND AS applies to it. Okay, now the overseas subsidiaries, they may not follow IND AS for SFS purpose. But for the purpose of consolidation, they need to give data to their parent, which will be based on IND AS. So they have to maintain a dual set of books. Okay, now Ashyat has a question that, sir, imagine this AINC UK. If AINC UK has 600 crores ka net worth, AINC UK has 600 crores net worth, B's net worth is less than 250 crore. I assume B ka net worth is less than 250 crore. Ashwat ka question is like this. Say here the net worth greater than 250 crore. And here the net worth is less than 250 crore. See, B is in India, uska net worth less than 250 crore, assuming it's unlisted, IND AS doesn't apply. Parent ka net worth kitna hai is not to be seen. And parent is abroad, na? So foreign parent's net worth is of no use. The foreign parent ka net worth, this is of no use at all. Are you clear? Aishat, foreign parent's net worth, this is of no use. Here, Indian company having a net worth less than 250 crore, IND AS will not apply to it. We have a question similar to this, don't worry. All questions are there. Everything is there in our material. Okay, and same way, IND AS will not apply to foreign parent. If I have a foreign parent doesn't have to follow IND AS. Okay, this was for normal companies. Now, NBFC. For NBFC. Banks and insurance companies are still not covered under IND AS. I repeat, banks and insurance company, they are still not covered under IND AS. RBI deferred IND AS implementation for bank till further notice. IRDA deferred IND AS implementation of insurance companies for further notice. So bank, insurance companies, they don't follow IND AS. NBFCs, yes. NBFCs, sir, from when? If you remember earlier, for normal companies, it was 1416 and 1417. 1416 onward, listed, unlisted, 500 crores or more. 1417, all listed, and unlisted having net worth 250 crores or more. Are you able to recall? Now, for NBFC, it's 1418 and 1419. It came up later. 1418 and 19, listed or unlisted, net worth 500 crores or more. And same way, parent, subsidiary, associate, JV of above. 1419 onwards, all listed. And unlisted having net worth 250 crores or more. Listed may all, unlisted 250 crores or more, similar. It's similar to above, only thing is over there the date was 1416, 1417, here the date is 1418, 1419. And parent, subsidiary, associate, JV of above. Are you clear? Are you clear? Okay, voluntary adoption is not allowed for bank, insurance companies, NBFC. उनको voluntary adoption was not allowed. Now coming to the questions. Before that, we take a break, 10 minutes. Do you need a break? 10 minutes? We'll just take a 10 minutes break and then we'll start again. Okay, Naveen has a question. So any reason why bank, insurance companies don't follow if they don't raise money from foreign? See, Naveen, what happens is for bank and insurance company, we already have insurance company mein IRDA and for bank basically RBI. So norms of RBI, IRDA are to be followed and still there is harmonization going on. Like the norms which are there basically under IND AS and norms which are there for RBI, IRDA, usme thoda they are trying to harmonize the thing and later on they will bring it. As of now, it's not applicable. It's not like it will never be applicable, but as of now, it's not applicable. Okay, Chaitanya has a question, sir. How about NBFC with a net worth more than 500 crore? Dear, it will be applicable from 1/4/18 onwards. Chaitanya, if NBFC has a net worth 500 crores or more, NBFC has a net worth 500 crores or more, it's 1/4/18 onwards, not 1/4/16 onwards. Dear Naveen, Chaitanya. Okay, we are taking a 10 minutes break. It's 8 o'clock and 17 minutes. It's 2017 over here. We meet back at 2027. So after 10 minutes, we are meeting back the dot 10 minutes. Enjoy your break. Okay, hi, welcome back. Give me a high five, thumbs up. We need to start with illustration number 1. Okay, now starting with question number 1. Whether IND AS are applicable to LLP. Okay, question is whether IND AS are applicable to LLP. Answer is no. Remember, IND AS are only for companies. IND AS are only for companies. So to LLP, it is not possible. Sir, can they follow IND AS voluntary? Answer is no. The IND AS Technical Facilitation Group, ITFG, they have said they are required to follow accounting standards. Non-corporate entities are required to follow accounting standards. Such entities cannot adopt IND AS voluntarily also. Now, I have a question. Imagine there is A Limited. Okay, this is covered under IND AS. Okay, they have a subsidiary which is B LLP. They have a subsidiary B LLP. So, sir, can subsidiary be a LLP also? Yeah, subsidiary is basically an entity where you have a control. It's not necessary, it has to be a company. So, A Limited has a subsidiary B LLP. B LLP will never follow IND AS because to them, voluntary also it's not allowed. But now, when A LLP is consolidating, A LLP, they will prepare, A Limited, when they'll prepare a consolidated financials, B Limited has to give data as per IND AS. I repeat, when A Limited prepares a consolidated financials, B LLP has to give a data which is as per IND AS. So indirectly, they have to maintain a dual set of books of accounts. Standalone purpose, B LLP always follows accounting standard. For the purpose of giving figures to its parent for CFS, for the purpose of giving figures to its parent for CFS, they have to give data as per IND AS. They have to maintain a dual set of books of accounts. Clear? Okay, the check. However, if non-corporate entity is a subsidiary associate of a parent or investor who is required to prepare CFS as per IND AS, then such non-corporate entity will separately produce financial information which is as per IND AS. Simple words, they will maintain dual set of books. Clear? Okay, next one, question number 2, November 19 exam, it was asked. Question number 2, November 19 exam, there's a Section 8 company. Oh, Section 8 company, not for profit. Section 8 company is there, and the management is of the view that being a Section 8 company, IND AS doesn't apply. Management ka view that being a Section 8 company, IND AS doesn't apply. Okay, the question, whether IND AS applies to Section 8 company. Whether IND AS applies to Section 8 company. Now question, did they give you any exemption? They told banking company, insurance company, IND AS doesn't apply. Banking, insurance, it's still not applicable. Did they give exemption for Section 8 company? No. So Section 8 company, if their net worth is 250 crores or more, if it's unlisted 250 crores or more, if it's listed, then to mandatorily, to them also IND AS applies. Now the Section 129 of Companies Act, you would have done it in your CA Inter also, auditing subject. The Section 129 of your Companies Act says what? The financial statement shall comply with accounting standards. And whenever they say it shall comply with accounting standards, if IND AS applies to you, IND AS are also applicable. So check Section 129 says what? The financial statement shall give true and fair view, it shall comply with accounting standard, and it shall be in a form given under Schedule 3. ठीक है, तो companies covered under section 8 are not exempted from section 129 as well as 133. 133 gives definition of accounting standard. Section 133 gives definition of accounting standard. So contention of management is not tenable. Any doubts? Question 1 and 2. So section 8 company, if net worth is 250 crores or more, they will be required to follow IND AS. Okay, so auditor needs to check the monetary limit, whether IND AS is applicable or not, and if IND AS is not followed, it was applicable, then auditor will be modifying his report. Okay. Now, A Limited is an unlisted company not covered by IND AS, but they have adopted IND AS voluntarily. Achha, so A Limited desires to apply IND AS voluntarily, but only for CFS. Achha, they want to apply IND AS voluntary, but only for CFS. SFS, they want to follow AS. Is it possible for part I follow, part I don't follow? I want to adopt voluntarily, but only for CFS purpose. SFS, I'll go for AS only. Is it valid? Answer is no. Is it valid? Answer is no. So you cannot have part AS, part IND AS. You have to follow it in full only. So voluntary you're doing, but do it fully. Please make sure you're answering. The more you answer, the more you feel fresh. I tell you 2-3 things which keeps you fresh. One, every 15-20 minutes a sip of water. Number 2, keep replying. The more you are active, the chances are you will not feel bored. Okay, question number 4. D is a parent of group A. Company A. D is the parent company of group A. Company A is an unlisted company having a net worth 60 crore. Achha, I'll just make a small change over here. Company D ki jagah make it as company A. Company A is a parent company of group A. Just make a small change. A is an unlisted company, net worth is 60 crores. Another following are the companies: B, unlisted subsidiary, and C is all subsidiary of B. Okay, so B is subsidiary of A, C is subsidiary of B. It's like this: A Limited, B Limited, C Limited. यहाँ पे net worth is equal to 60 crores. Here net worth is equal to 600 crores. And here net worth is equal to what it was, 150. Okay, now can I say B has a net worth more than 500 crore? It applies to B. B has a net worth more than 500 crores, it applies to B. Okay, and if it applies to B, it also applies to B's parent, B's subsidiary, B's associate, B's JV. So B's parent is A, B's subsidiary C, it applies to everyone. B's parent is A, B's subsidiary C, it applies to everyone. Did you got it? You can just write down this. Thank you. B applicable, B's parent, B's subsidiary also applicable. Okay, the check over here. Net worth of B exceeds 500 crore. IND AS applicable to B. parent of B is A and subsidiary of B is C will also get covered under IND AS. Hence, it's applicable to all three companies. Okay, question number 5. Question number 5, there's a company D. D has a subsidiary E and a subsidiary H. Okay, so there is this company D. D has a subsidiary E and H. Okay, E has a subsidiary F associate G. So E has a subsidiary F associate G. And this H has a subsidiary I. H has a subsidiary I. This is the data given. Okay, in the above situation, what is this? All unlisted. Net worth of E is 300 crore. Net worth of company E. Net worth of company E. Okay, E is 300 crore. All other companies below 250 crore. Tell me, which all companies IND AS apply? Which all companies IND AS apply? E का net worth 300 crore, it applies to E. कहाँ गया? E. Okay, so it applies to E. Okay, if it applies to you, it applies to your parent, your subsidiary, your associate. If it applies to E, so your parent, your subsidiary, your associate. Now, H is not your subsidiary, it's your parent's subsidiary. H is not your subsidiary, it's your parent's subsidiary. So, H and I not applicable. H and I will not be applicable, but the problem is, company D will prepare financials as per IND AS. H and I will not be applicable, but company D will be preparing financials as per IND AS. So for the purpose of consolidation, H and I will be required to give figures to D as per IND AS. So can I say indirectly they have to maintain dual set of books? Okay. So this no, this no. Let's see the solution. Chaitanya, it's not for CFS applicable. It's CFS will be prepared by company D. This company D prepares CFS. These two companies will be required to give data to company D as per IND AS. Clear? So let's check the solution. Turnover of company E is 250 crore. It's covered. Its subsidiary F, its associate G, and holding D would also be covered. H and I would not be covered. However, to facilitate company H for preparing CFS statutorily, even though they are not covered, they have to give data as per IND AS. Moreover, they may also voluntarily go for IND AS. That's also option possible. Clear with question number 5? Okay, question number 6. Question number 6. X and Y are companies registered in India. Net worth 600 crores, 200 crores. They are a subsidiary of AINC. Okay, they are a subsidiary of AINC who has a net worth more than 500 crore. Okay, so kind of there is AINC. Foreign company, I write in brackets say UK. Net worth greater than 500 crore. Iska net worth is actually of no use. Okay, they have two subsidiaries. X and Y. X is 600 and 200. Okay, X limited, Y limited. This is okay. Now, net worth of your foreign parent, this is of no use. Net worth of your foreign parent is of no use. Acha, Mohan has a question, sir. Is it turnover or net worth? Dear, it's net worth. It's not turnover. It is net worth. Net worth is assets minus liability, or you can say capital plus reserves minus your fictitious assets. I'll come to that word later on. We'll understand the calculation of net worth and which dates net worth we need to take. Clear, Mohan? Okay, the IND AS applies to whom? Okay, X Limited is in India. X has a net worth more than 500 crore. It applies. The 250 crore hai, as such, so it applies to X. Achha, if it applies to X, X ka parent, X subsidiary, X associate, X ka JV. Okay, X parent is foreign. Foreign parents not applicable. Foreign parent not applicable. X doesn't have a subsidiary, X doesn't have an associate, X doesn't have a JV, and Y also it is not applicable. Did you got it? Only to X it is applicable. Perfect. Only to X it is applicable. Okay, if anybody wants to write this AINC UK and then the two subsidiaries like a chart form, you can just write it down. Mohan, are you clear? It's net worth, not the turnover. ठीक है, तो over here X has a net worth 600. It's required to follow IND AS. This is not incorporated in India, does not apply to it. Foreign parent, they are not covered. Okay, next. X is a company covered under IND AS. Y was a subsidiary of X and Y was also covered under IND AS. Last year, they disposed of the holding in Y. Okay. So Y was a subsidiary of X. That's why IND AS was applicable. Now I'm no longer a subsidiary. Now I'm no longer a subsidiary. Still whether IND AS applies? Answer is yes. Once applicable, lifetime applicable. Whether Y still needs to follow IND AS? Answer is yes. Once applicable, lifetime applicable. Clear? Okay, next, whether IND AS applies to interim financials. If you're not preparing a full-fledged financials, but you're preparing an interim financial statement. Achha, Mohan has a question, sir. In question number 5, they've given turnover. Let me just go to question number 5. Here they've written net worth only. In question, they've written net worth only. By chance, suppose in solution the word written is turnover, make it net worth. Achha, this one. Here you can just make it not turnover, make it net worth. It's a typing mistake. Clear? Okay, question number 5, just change this word turnover to net worth. Okay, next. Question 8, whether IND AS applies to interim financial. Interim is, suppose you're preparing a quarterly financials. If you're preparing a quarterly financial, see if IND AS applies to you, it applies to your interim financials also. So whether it applies to your interim, the answer is yes. So if it applies to your annual financials and you're preparing interim, for interim also IND AS is applicable. Okay, can IND AS override the statute? Answer is no. Can IND AS override the statute? Answer is no. If there's a conflict between IND AS and statute, statute prevails. I repeat, if there's a conflict between IND AS and statute, statute prevails. Are you clear? Okay, now, Schedule 3. Schedule 3, can I say it's a part of statute? Schedule 3 to the Companies Act 2013. Schedule 3 is a part of statute. I have a question. If there's a conflict between Schedule 3 and IND AS, what will prevail? If there's a conflict between Schedule 3 and IND AS, what will prevail? IND AS cannot override the statute. If there's a conflict between Schedule 3 and IND AS, what will prevail? Okay, so Ashyat says schedule 3, Chaitanya also says schedule 3, Ahmed also says schedule 3. Now pay attention. So you say schedule 3 is a part of statute, so IND AS cannot override the statute. If there's a conflict, schedule 3 should prevail, but the first line of schedule 3, the first line of schedule 3 says if there's a conflict between schedule 3 and your IND AS, the requirement of schedule 3 stands modified. The first line of schedule 3, what does the first line of schedule 3 say? If there's a conflict between schedule 3 and IND AS, the requirement of schedule 3 stands modified, means IND AS prevails. However, schedule 3 to the Companies Act is clarified where the requirement of IND AS require any change in treatment or disclosure, the same shall be made and the requirement of schedule 3 stands modified. That is, your IND AS will prevail. Did you got it? So normally IND AS cannot override statute. But if there's a conflict between IND AS and schedule 3 itself has said, that the requirement of schedule 3 stands modified, means IND AS will prevail. Are you clear? But there is one exception. So schedule 3 has said IND AS will prevail. Schedule 3 has said IND AS will prevail except for the option of presenting assets and liabilities in order of liquidity, which is given under IND AS 1. Okay, the IND AS 1 allows you to prepare a balance sheet in order of liquidity or permanence. You start with PPE and last may cash. You start with PPE, last cash, that's order of permanence. You start with cash, last PPE, that's order of liquidity. So IND AS 1 allows order of permanence or order of liquidity. You start with PPE, to bhi chalega, or you start with cash, then also fine. But that they are telling it's not allowed. So if there's a conflict between schedule 3 and IND AS prevails except for the option of presenting assets and liabilities in order of liquidity, which is given under IND AS 1. So IND AS 1 tells you can prepare balance sheet in order of liquidity, but no, that is not allowed. Except that point, if there's a conflict, IND AS prevails, but only for that point, schedule 3 will prevail. Did you got it? So normally if there's a conflict between schedule 3 and your IND AS will prevail, but IND AS 1 gives option of presenting the balance sheet in order of liquidity. They say no, that is not allowed. Everyone clear? Thank you. Okay. Now going to the word net worth. How do we compute net worth? We need to finish off this chapter today. That's today's target is this chapter. Once this chapter over, we are done for the day. Now, first of all, which date's net worth was a question. Which date's net worth? So you have to check basically that 500 crores or more or 250 crores or more. Which date? You have to check the date 31st March 14. And it will be based on your standalone financials. The net worth will be determined based on your standalone financials, not CFS. And it will be 31st March 14. I have to check 31st March 14 if it is 500 crores or more. So it applies from 1416 onwards. If 31st March 14 it's 250 crores or more, it applies from 1417 onwards. Okay, I have to check of 31st March 14. Now sir, what if 31st March 14 is less than 250 crores? Then you check every year again. So when you check on 31st March 14, if you don't fulfill on 31st March 14, you have to check every year end. And the day when you fulfill, next year say it will be applicable. Okay, so I have to check on 31st March 14. And if sir, I was not there only on 31st March 14. If you're not there only on 14, suppose sir, our company is incorporated on 1419. If our company is incorporated on 1419, I have to check the first year end ka net worth. If you are not there only, first year ends net worth. If you are there, If you're there to 31st March 14, sir, what if 31st March 14 I don't fulfill criteria? If 31st March 14 you don't fulfill criteria, we'll check. We'll check the criteria every year. If 31st March 14 you don't fulfill criteria, we'll check the criteria every year, and the year when you fulfill, next year onwards it will be applicable. The check companies which were not in existence on 31st March 14 or companies which did not meet criteria on 31st March 14 shall reassess each balance sheet date, and once they meet the applicability, applies from the next year. Once they meet applicability, it applies from next year. So for example, you meet the net worth criteria on 31st March 20. Okay, March 14 your net worth was less than 250 crores. 15, 16, if see March 14 it was less than 250 crores, I'll check every year. March 15, March 16, March 17, March 18, March 19, March 20. Oh, March 20 now it exceeded. March 20 now it exceeded 250 crore. Okay, March 20 it exceeded, so 1/4/20 onwards it will be applicable next year. ये March 20 खत्म हुआ, next year onwards. So 1/4/20 to 31st March 21. From that year onwards, you will be following IND AS. Okay, the one you check on 31st March 14. If 31st March 14 you are not fulfilling, you have to check every year. Are you clear? Okay, now how to calculate net worth? Check out the calculation of net worth. Net worth is the total of paid up share capital, and your paid up capital will include your equity preference both, because under your share capital under AS, in your share capital under AS, you have equity preference both, equity share capital plus preference share capital. Okay, all your reserves, securities premium except the revaluation reserve. The reserve created by revaluation of asset cannot be included. All your reserves except revaluation reserve. And if there is any fictitious asset, accumulated losses, fictitious assets are accumulated losses which are not yet written off. Fictitious assets are accumulated losses which are not yet written off. That needs to be deducted. Okay, now Srinidhi has a question, sir. What if it exceeds at the interim time? Sir, see Srinidhi, you don't have to check an interim time. I have to check first on March 14. March 14 nahi hua, then every year end. Each balance sheet date is the word written. Then you check on March 15, then you check on March 16, then you check on March 17, you have to check that way. And the year when you fulfill, suppose March 17 you fulfill, so 1/4/17 onwards it will be applicable. Are you clear? Okay, now I have a question for you. Okay, 31st March 14 net worth is equal to 200 crore. Can I say not applicable IND AS? Now 31st March 15 the net worth is 300 crores. Okay, the March 14 it is 200 crore, it was not applicable, so I have to check it every year end. Yes, no? So now March 15 is basically I'm checking it's 300 crores. Can I say now it crossed the limit? Now it crossed the limit for 250 crore wala. So normally it gets applicable from next year. So can I say now it will get applicable from 1/4/15 onwards, essay? Yes, no? But if you just recall, those who have a net worth 250 crores or more, even in March 14, those who have a net worth 250 crores or more, even in March 14, can I say for them it was 1/4/17 onwards? So it will not be applicable from 1/4/15. No, it will be applicable from 1/4/17. Clear? Because those who had more than 250 crore on 31st March 14 also, for them it was 1/4/17. Acha, now pay attention. Here it was 300 crores. 31st March 14 is 300 crores. And then the net worth became 600 crores. Tell me, IND AS applies from which date? 31st March 14, it is 300 crore. 300 crore is, can I say, 250 crores or more? As per this date, it is applicable from 1/4/17. You are not falling in that phase 1, you are falling in phase 2. So phase 1 you did not qualify, but March 15 when I check, now you are qualifying for phase 1 also. March 15 if I check, you are qualifying for phase 1 also. If you are qualifying for phase 1 also, March 15, you will not be applicable from 1/4/15, but you will be applicable from 1/4/16. Remember phase 1. Those who have a net worth 500 crores or more, for them it's 1/4/16 onwards. So if I see March 14 wala thing, it comes this. March 14, you did not fulfill criteria for phase 1, you are fulfilling criteria for phase 2. As you did not fulfill criteria for phase 1, I have to check every year. So now I check next year, now you are fulfilling phase 1 only. So now it will be applicable not from 1/4/15, it will be from 1/4/16 onwards. Are you clear? Okay, Ashwath says, what if this was not 600, this was only 100? Correct? So Ashwath is telling, sir, what if it was not 600, it was 100? Then, dear, then it will be applicable from 1/4/17 because March 14 you are still fulfilling phase 2 criteria. Correct? So Ashwath, it will be from 1/4/17. Acha, and see, whenever it's applicable 1/4/17 or 1/4/16, the previous year data also has to be as per IND AS. Nikita, yes, the previous year data also has to be as per IND AS. Okay, check. These all questions are also given to you. First of all, we have a question. We are required to calculate the net worth. Okay. It's a listed company. Which phase the company falls? So let's calculate the net worth. Net worth is capital plus all your reserve except revaluation reserve minus fictitious asset. So share capital, yes. Securities premium, yes. General reserve, yes. Revaluation reserve, no. P&L, yes. And liabilities, no. This all minus the fictitious asset. To do it, 160 plus 200 plus 150. It is 160 plus 200 plus 150 plus 75 minus 80. Is it coming 505? Okay, so your net worth is coming 505. As your net worth is 505, can I say 1/4/16 onwards it will be applicable? Achha, would your answer change if it's unlisted? Would your answer change if it's unlisted? Unlisted more than 500 crores, same 1/4/16. So remember 1/4/16, listed, unlisted, net worth 500 crores or more. Okay, तो यहाँ पे listed है तो 1/4/16 onwards, unlisted also 1/4/16 onwards. Any doubts? And this is the data of March 14. So March 14 net worth is more than 500 crores, listed, unlisted, both में it will be same. As a second thing, what if in above illustration the P&L balance is negative 375? Okay, P&L is negative 375. So what I'll do? 160 plus 200 plus general reserve is 150 minus P&L 375. P&L 375 minus and fictitious asset 80 minus. Can I say net worth is 55 crores? If you're stuck up anywhere, stop me at the same time and please pay proper attention. Okay, so 55 crores, is it coming? Dear, P&L negative I have to deduct. While finding net worth, it will be deducted. So your net worth is coming 55 crores. Equity share capital 160, securities premium 200, general reserve is 150, minus P&L debit is 375, miscellaneous expenditure not written off 80. Okay, so it's only 55 crores, it doesn't fall only. as such नहीं, but listed है तो can I say 1417 all listed are covered? So if it's a listed company, 1417 onwards all listed covered. Unlisted है, it will not be applicable. Unlisted 55 crore net worth will not be applicable. Are you clear? If it's a listed one, 1417 onwards all listed covered. Unlisted 55 crore net worth will never be covered. Okay, Ashyat has a question, sir. March 14, the net worth 250 crore. March 15, net worth 100 crore. So still it will be applicable because March 14, it's 250 crore. It will go in your phase 2, 1417 onwards, Ashwath applicable. Any doubts? Question 10, 11. Any doubts? Question number 10, 11. I want answers from every one of you, please, fast. Thank you. Okay. Going to the next one, question number 12. Going to next one, question number 12. Listed company and they were given a net worth on March 14, 600 crores. Can I say 1416 onwards? You have to give comparative, but that's okay. I'm not writing that. It's 1416 onwards. Unlisted also more than 500 crore is 1416. Okay, listed 300 crore, 1417. Unlisted 300 crore, 1417. Listed 100 crore, still 1417, all listed. Unlisted 100 crore, not applicable. Unlisted 100 crore is not applicable. Are you clear? Acha, unlisted 100 crore, not applicable. Sir, I have to check every year, yeah? Every year you have to check. They have given already assumed net worth in later year is same. Okay, done. Question 12 is over. 13th. Okay, now your questions. Okay, unlisted company. March 14, 600. March 15, 400. Okay, March 14 is 600. March 14, 600. Can I say you're covered in phase 1, 1416 onwards? March 14, 600. You're covered in phase 1, 1416 onwards. Okay, next one is question 14. Unlisted company net worth March 14, 300 crore. 15 is 600 crore. Oh, okay. Now, March 14, 300 crore, as such, you're falling in phase 2, correct? As such, you're falling in phase 2. You did not fulfill phase 1 requirement, so we'll check every year. You did not fulfill phase 1 requirement, we'll check every year. March 15, you fulfilled. March 15 you fulfill, so it becomes applicable from 1415. But 1415 तो किसी के लिए नहीं है. 1415 is not for anyone, so it's from 1416 only it will be applicable. Perfect. Company which did not meet the criteria as on March 14, we have to reassess at each balance sheet date. In current case, phase 1 was not met. The threshold is met on March 14 and IND AS will be applicable from 1416 onwards. I cannot have 1415 onwards because 1415 is for no one. Even if it was met on March 14, still it's not from 1415. It is from 1416 onwards. Clear? Okay, next topic. NBFC whose parent or subsidiary associate JV is a NBFC. Achha, non-finance company whose parent subsidiary associate JV is a NBFC. अब ये क्या है? Pay attention. A Limited, NBFC, they have a subsidiary B Limited. Or A Limited, non-finance company, they have a subsidiary B Limited, which is NBFC. Okay, now the problem is NBFC, the IND AS starts from 1418. For NBFC, it starts from 1418, and for normal company, it starts from 1416. Normal company, it was 1416, 1417. For NBFC, it was 1418 and 1419. Are you clear? Okay. Now imagine B Limited. B Limited. The IND AS applied to B Limited. The IND AS is applied to whom? B Limited. So whether IND AS will also apply to A? For B Limited, it applies from 1416. For B Limited, it applies from 1416. Whether IND AS will also apply to A from 1416? Did you got the question? Or to A, it will come from 1418. That is one. IND AS is applied to B from 1416. So if it applies to you, it applies to your parent, your subsidiary, your associate, your JV. Your parent A Limited, so whether they have to follow from 1416 or they have to follow from 1418. This is one question. Now second, यहाँ पे IND AS applies to A Limited, non-finance company, 1 from 16. So to A Limited, here it applies from 1416. Now B is your subsidiary, but it's an NBFC. So whether B will also apply from 1416 onwards. Whether B will also apply from 1416 onwards. Okay, for SFS purpose, B will apply from 1418. For SFS purpose, B will apply from 1418. But can I say while preparing CFS, B's figures will be merged with A? So for the purpose of CFS, B has to give figures to A which will be as per IND AS. Okay, so for SFS purpose, B will follow IND AS from 1418 onwards. But for the purpose of CFS, they have to give data to A Limited that has to be as per IND AS. So can I say from 1416 to 1418 they have to maintain dual set of books? SFS will be normal AS, but for the consolidation purpose I have to give data as per IND AS. Okay, now check this theory. The same thing written in theory. Okay, where NBFC is a parent. Okay, NBFC is a parent is this one, the first one, A Limited to B Limited. Okay, this is A Limited is NBFC. B Limited is non-finance company. Okay. Now tell me if IND AS applies to B. If IND AS applies to B, IND AS will apply to A Limited from 1418 only. IND AS will apply to A from 1418, not from 1416. So IND AS will apply to A Limited from 1418 only. Okay, so my question, 1416, 1417. 1416, 1417. Can I say NBFC, who is a parent, they are following AS? Yes, no? Yes, no? NBFC, who is a parent, they are following AS. 1416, 1417, they are following AS. 18 onwards, they will follow IND AS. Now the thing is, subsidiary is following IND AS from 16 only. Parent is following from 18. So now 16 and 17, parent are preparing CFS. Parent will need data from subsidiary, which has to be as per AS. The parent will need data from subsidiary, which has to be as per AS. The subsidiary, what happens? Subsidiary will prepare as per IND AS from 1416 only. But for 16 and 17, they have to give data to parent. They have to give data to parent who is following AS. So they have to give data to parent as per AS. The subsidiary has to maintain dual set of books for 2 years. Did you got it? Subsidiary has to follow dual set of books for 2 years. So check over here. Such subsidiary, associate, joint venture shall prepare financial as per IND AS for SFS purpose if it is covered in roadmap. However, can I say parent will be covered from 18 onwards? So such subsidiary, associate, JV has to provide the relevant financial data in accordance with accounting policy followed by the parent for consolidation purpose. The simple words, from 1/4/16 to 31st March 17, the subsidiary has to maintain a dual set of books which will be as per AS as well as IND AS. I just put a star and I write down from 1/4/16 to 31st March 17, 18. Such non-finance company which is subsidiary, associate or JV of NBFC will have to provide figures to NBFC parent as per AS for purpose of CFS. Are you clear? Okay, next one, your parent is non-finance company. Your parent is non-finance company. This is basically your A Limited non-finance. And B Limited is NBFC. So can I say B will start following IND AS 1/4/18 onwards? B will start following IND AS 1/4/18 onwards, but from 1/4/16 to March 18, they have to give figures to A Limited for CFS. Okay, I will start following from 1/4/18, but I have to give figures to my parent for the purpose of CFS. For that 2 years, I will have to give figure as per IND AS only. See, I have to give figure to parent based on policy what parent follows. You have to give figures to parent based on policy which parent follows. So NBFC subsidiary, associate, JV has to provide relevant data in accordance with the policy followed by parent for consolidation purpose. I put here 2 stars. I put here 2 stars and I write down below. from 1/4/16 to 31st March 18. Such NBFC, which is subsidiary, associate, or JV of non-finance company, will have to provide figures to non-finance parent company as per IND AS for purpose of consolidation, for purpose of CFS. Did you got it? Did you got it? If parent is NBFC, subsidiary started following earlier, parent will follow later. So 2 years when parent was following AS, subsidiary might be following IND AS, but for CFS purpose, subsidiary has to give data as per AS. For 2 years, that subsidiary will have to give data as per AS. Okay, if NBFC is a subsidiary, parent has started following IND AS, I'll follow later. Okay, for that 2 years, I will have to give data as per IND AS for the purpose of consolidation. In simple words, whatever your parent is following, based on that, the data has to be given by you. If you are following a different one, you have to maintain a dual set of books of accounts. Any doubts? This question is very important. This point is very, very important. Please make sure whatever I've written at top and bottom, you're writing it. Whatever I've written at top and bottom, you please write it down. Ten more minutes, this will be over. Aishat, this PDF cannot be shared because it's not in PDF. The marking I'm doing is not in PDF. The marking I'm doing is basically in OneNote. OneNote, see, you cannot share this file. So I have given you the PDF basically in our Telegram channel. I shared you the link. You can just download and you can highlight it together. That's again one of the options which you're having. Okay, Mohan has a question, sir. If a company gets converted into LLP, when it was a company, it was IND AS, suppose applicable. Now it becomes LLP, whether IND AS will be applicable? Answer is no. See, once applicable, lifetime applicable means if it remains as a company, it's lifetime applicable. If you become a LLP, then it's no longer applicable. Are you clear? And it's very rare, like such a big company getting converted into LLP. Such a big company. Clear, Mohan? Okay, now check question number 15. It's based on this topic which we just discussed. X is a non-finance company. It's a subsidiary of Y NBFC. Okay, so Y NBFC and X non-finance company. So Y and below it is X. Y Limited is NBFC and X Limited is, can I say, non-finance? Okay, so now from 1/4/16 to March 18, X is basically having IND AS, but Y doesn't have IND AS. X is having IND AS, Y doesn't have IND AS. So 1/4/16 to March 18, X has to give data to Y as per AS. Okay, so check out over here. Y is unlisted NBFC, net worth 400 crore. Y is unlisted NBFC, net worth 400 crore. Okay, so 400 crore is 1/4/19. So company Y shall apply IND AS 1/4/19 onwards. What shall be the date of applicability of this? And subsidiary also, if it's applicable to you, subsidiary will also follow from that date only. If IND AS applicability date for parent NBFC is different from applicability date of subsidiary, what to do? If the dates are different, so what do we do? So company X will have IND AS from 17/18. However, for the purpose of consolidation, that company X will give data to company Y, which will be based on AS. So 2 years, company X, this one, non-finance, they have to give data to parent. Parent follows AS, so they will be giving data to parent as per AS. They will also prepare its individual financial statement as per AS. This is for the purpose of consolidation, for the purpose of giving figures to Y Limited for consolidation. Are you clear with this question? Are you clear with this question? It's important. The NBFC net worth 400 crore, it's 1/4/19 onwards. 1/4/19 to you, your subsidiary also gets covered from 1/4/19. If subsidiary was covered earlier, if subsidiary was already covered earlier, they have started following IND AS, but for that 2 years, they will be giving me data for CFS, which will be as per AS. Next one, Companies Act, the sections of Companies Act referring to IND AS. Sections of Companies Act referring to IND AS, section 2, subsection 2. It gives the meaning of accounting standards. Section 133 also states accounting standards are the standards of accounting recommended by ICAI, prescribed by central government in consultation with NAFRA. Okay, so section 2, subsection 2 says accounting standard means the standards of accounting referred under section 133. Section 133 says central government may prescribe accounting standards recommended by ICAI in consultation with NAFRA. It's prescribed by central government, recommended by ICAI in consultation with NAFRA. Okay, then section 129, we already did. The financial statement shall give a true and fair view. It shall comply with accounting standards. Okay, section 134, subsection 5 is director's responsibility statement. This is director's responsibility statement in your director's report, BOD report. So in your BOD report, directors are taking a responsibility that they have complied with the applicable accounting standards. A statement that their applicable accounting standards have been followed. And this is in director's report. Director's report. Okay, section 143, auditor has to opine whether financial statements comply with accounting standards. The auditor opines whether the financial statement complies with accounting standards. The one, section 2, subsection 2 tells accounting standards are the standards of accounting referred under section 133. 133 gives definition of accounting standards. Okay, then section 129 says financial statement shall comply with accounting standards. 134 subsection 5, directors responsibility statement. Directors are taking responsibility while preparing financials. They have complied with the applicable accounting standards. Section 143, actually it's 143 subsection 3 clause number E. 143 subsection 3 clause E, auditor has to opine whether the financial statement comply with accounting standards. Okay, section 230, it's basically related to compromise arrangement, that's amalgamation merger. The scheme of amalgamation merger sanctioned by tribunal, uska jo accounting hai, it is in conformity with accounting standards. This talks about mergers, acquisition, the scheme. Sanctioned is to be sanctioned by tribunal only after obtaining certificate from auditor that the accounting treatment given is in conformity with accounting standards. So wherever the word accounting standards are there in different section of Companies Act, that's written. And section 66 is reduction of capital. Again, the reduction of capital, the scheme should be sanctioned by tribunal. Scheme should be sanctioned by tribunal unless they get a certificate from the auditor that the treatment is as per the accounting standard. Unless the accounting standard proposed by company is in conformity with accounting standard. And a certificate to that effect has to be given by auditor to the tribunal. So tribunal, before passing or before basically clearing the scheme of capital reduction or a scheme of merger amalgamation, they will approve the scheme only after getting a certificate from auditor that the treatment which is to be given by the company is in accordance with accounting standards. Did you got it? It's a theoretical question, you just have to read it. Shall I move ahead? Last 2 minutes. Okay, now going to your schedule 3. Schedule 3 is divided in 3 divisions. Okay, I repeat, schedule 3 mein there are 3 divisions. There are 3 formats of balance sheet, 3 formats of P&L. Right? Sir, ek nahi hai? Nahi. In your schedule 3, there are 3 divisions. Division 1 is for those companies following AS. Division 2 is for those companies following IND AS. Division 3 is for NBFCs following IND AS. So Division 1 for companies following AS, Division 2 for companies following IND AS, Division 3 for NBFCs which are following IND AS. And there are 3 formats of balance sheet, 3 formats of P&L. Schedule 3 is divided into 3 divisions. Division 1, this is for those who are following AS. Division 2, those who comply with IND AS. Division 3 is NBFC who comply with IND AS. And full schedule 3 will be doing it later. Full schedule 3 will be doing it. We have a separate chapter on it. Full schedule 3 in detail will be done by us. And now this is a list of your accounting standards. Not accounting standard, IND AS. If you recall, IND AS 1 to 41. IND AS 1 to 41 is nothing but IAS 1 to 41. And 101 to 116. 101 to 116 is nothing but your IFRS 1 to 16. So IFRS 1 to 16 is 101 से लेके 116. And 1 to 41 is IAS 1 से लेके IAS 41. IAS 1 to IAS 41. And you might see some missing in this. IND AS 1, 2, then you got 7. 1, 2, then you got 7. Sir, where is this IND AS 3, 4, 5, 6? Now see, for a topic, pay attention, for a topic, earlier there was IAS, same topic if IFRS comes. There was IAS and same topic. If suppose IFRS is coming for the same topic, then that IAS gets removed. If for the same topic IFRS came, the IAS got removed. So it is possible like you might see some missing figures here because that IAS is gone. The same way our IND AS is also gone. We have replica. IAS 1 to 41 is IND AS 1 to 41. IFRS 1 to 16 is IND AS 101 to 116. Any doubts? Anybody? Done for the day. Any doubts? Anybody in today's work? Thank you, Naveen. Thank you, Vishnu Prasad. Thank you, Chaitanya. Thank you, Abhilash. I want answers from everyone, please. Thank you, Ahmed, Mohan, Ashyat, Nikita. Thank you, Nikita. Okay, so I hope you enjoyed the first session. Tomorrow again we'll be meeting, same time, 6:30 to 9:30. And I tell you, see, every day in class, I try to share something which kind of motivates student. Either I say some good sentences or I say my experience or my friend's experience, kind of that when we were studying, when we were doing CA, what wrong we did or how did we ensure that we cracked it in first attempt. So today being the first day, let me tell you one of my favorite sentence. This is basically a sentence from Srimad Bhagavad Gita. It says, if you don't fight for what you want, don't cry for what you lost. If you're not making efforts and later if result comes negative, don't sit and cry. If you don't fight for what you want, don't cry for what you lost. Nothing comes by luck. Everything comes by work. Even your luck has to work. Nothing comes by luck. Everything comes by work. Even your luck has to work. Day one, please keep in mind, you need to put in efforts. It's not by luck. It's all by your work. Chalo, see you all tomorrow. Tata, bye-bye, take care. If anybody wants to ask anything, I'm here. Others can leave. We'll meet again 6:30 p.m. tomorrow. And if you like our lecture, please share it with all your friends. You can recommend them to join. Today's session was just the first class. If somebody has missed first class, tomorrow has no connection with it. So tomorrow's topic, there's no connection with this topic, so anybody can join from tomorrow also. Chalo. Bye-bye Ahmed, bye Abhilash, bye Nikita, bye Vishnu Prasad, bye Mohan, bye Sudha, bye Srinidhi.